Hello everyone. Good afternoon. Welcome to the PivotBoss Monthly Market Outlook for January 2021. Today is Wednesday, January 6th, 2021, and we have ourselves a pretty full docket here of stocks to take a look at. Number one, I will say thank you all very much for joining me here today. If you have any requests that you'd like me to check out, please post it in either the chat box there or in EchoFin in our trading room. I'll be monitoring both right now. So we'll be taking a look at several stocks here. Again, if you have any special stocks you'd like me to get to, please list those anytime you like, and I'll get to it. First of all, my name is Frank Ochoa. I am also known as PivotBoss, author of the book Secrets of a Pivot Boss. You can find me in our trading room each day at pivotboss.echofin.com. Right now we have pretty incredible scenes going on at the moment here outside Capitol Hill, and again the market right now kind of backing off the day's highs. I wanted to give a look here of kind of a higher time frame look at the markets every time we get past to the new year here. So we finish up a year and we start heading into the new year. The first couple of weeks of the new year can be very important, and how those play out can really be important over the course of the quarter and perhaps the first 2 quarters of the year. Right now, something that's very interesting here is the similarities that we had to last year to end the year, and even before that. You'll notice here that these are each of the last 2 rotations we've had, or each of the last 3 rather, right here. What you'll see is an end of year move heading into January, and then we had a huge pullback, really sizable, gave us a very good key range. This one we rallied here but had a huge pullback into Q4, which was different. In this case over here, last year a big rally into January, through January, and then COVID hit here and we had a major pullback over the course of the month. And now here we are again. We've rallied into the end of the year. We've taken out new all-time highs. We're just close to 31K. Are we going to see this thing turn all the way back down? And if you look at this in a weekly time frame, this is a pattern that we've been following for quite some time. So again, this is the Dow, the YM more specifically, and we've had this idea for a while of the expanding range. We've had to kind of update the expanding range a little bit over time, and now you can see here it is right on a line, perfectly on that upper line here, and the next level down would be somewhere on this line if it were to play out in that manner. Now each of these ripples have gotten increasingly larger. This was a significant move over 2 weeks. The Q4 move was even more significant, and then of course this was probably the single greatest drop we've seen here very quickly. If we were to see a reaction off this edge over here, not necessarily thinking that we go all the way across, it's baby steps, but we could certainly see a quick reversal, say to 27K or 27.5. That 27 level has been important. If you bring it across like this, it was prior highs back here. It's a very good kind of pullback zone between 27 and 27.5 to retrade through this thin part of the profile. And then you have perhaps the HVN below between 25 and 26K, which could be kind of a rejection of highs and a return to value play. From there, we'd see how this thing plays out if there's more, but again, this is going to be something to continue to watch here early this year. Obviously the market on highs, new all-time highs here reached today, but we're on that line up there, which is going to be something very important to continue to watch, because if we do break down here, this could be a tremendous opportunity all the way back to value. And then from there, if there were any rejections of this low, it may not be down there for more than a day or morning, and then we may be headed right back up very quickly and ultimately rally higher. So this is going to be an important pattern to continue to watch. It's played out tremendously against some of the biggest patterns we've had over the last decade. I mean, some of these moves right here pale rather in comparison to what we've seen here recently. Are we going to see another pullback here up ahead? We'll see. We got to continue to watch that upper line. So the level to watch, if we bring this down into the lower time frame here, is we're going to watch this recent low right here, this support in this zone right here. It's basically 29.5. Nice little LVN there. If you look at the 5-year profile, this is VAH, so the value area high. Right here, this is VPOC. Down below, somewhere down here, would be the value low. So right now we're kind of up here in this zone. If we were to fail to hold 500 or 550, 29.5, that would open up a quick path back to the 26K level. That's about where we bounced here and broke out here. It's also value right here, see VPOC. So this is going to be the level to watch here. Right now we're still trending up. We're only the 3rd trading day of the new year. It's battling these levels here. If at some point we turn down through 29.5, things could get very interesting very, very quickly. So that's going to be something to watch out for. Now, again, this market continues to be very strong. You can see back here, this was prior support or prior resistance right there. That's what we're holding above in this tiny rectangle right now. So a failure to hold that level opens us up to the bottom of the zone here. It's very similar to what happened before when we formed this range right here, kind of above the resistance that had developed back here, and then we dropped. So very similar market structure here, but again, this market remains bullish, but it's coming into a point here where things could get very, very interesting if it breaks 29.6 or 29.5. Now, if we take a look at kind of the broader market here with regards to tech, we have the NASDAQ 100 right now, which has formed a very nice uptrend here over the recent quarter. Very, very strong move. Now, one thing that you'll notice here on my charts, if it's easy for you to see, is I have pivots here going back. One of the pivots that I have here are 3-month pivots, so these are quarterly pivots right here. And what you'll notice right here is that's the previous quarter's high. This level right there is the previous quarter's close, and that's the previous quarter's low. So that's the quarter low, the quarter high, the quarter close, and this level right there, that is your midpoint of the previous quarter. Now, one thing I do here is I tend to look at monthly pivots, weekly pivots, daily, depending on what time frame we're doing. But since we're going into a new quarter for the year, it's good to put up the quarterly pivots. And one thing I usually mention is that when you have a wide range and then price closes at one of the extremes of the range, there is the potential to see a rejection here of these levels and see a quick turnaround back to the previous quarter's midpoint. This is something we talked about in the very first pre-market video of the year, something we've been talking about in our trading room as well. That's going to be something to continue to watch. With regards to the NQ, the key level to continue to watch here is the key range high. There's the key range high right there. If you bring it across, it's 12,465. The key range low is here, 10,656, and then you have the midpoint, which is right there, and that's 11,560. That's the key range to continue to watch. And as of right now, the market is holding in a box precisely above the key range high. And again, at times, this could be a major bull trap here to get people long at the very end. And then if that level is taken out, a massive turnaround occurs across that key range. So if there's a failure to hold 465, that's going to unleash a major wave of weakness back to 560, 11,560, and then perhaps even a shot to go all the way across the range into 1065. So here's the range right here. And if it gives this up, it could be 2 days and we could be here. Very similar to what happened here. From here down to here, that was 2 days. It could be a very quick move. So if there's some point here where price really starts to struggle and cannot hold above 450, that could lead to quite a transition to the downside that leads price across this key range. Now at the moment, we're still in an uptrend. You still see the Pima trigger zone being defended. Today had a failed new low. It didn't quite close as strong as it could have. 12,800 continues to be a big time area of resistance. If this can make this a strong low and we push higher, then again we have 11.4 that could be ahead. So right now we're looking at 2 equidistant targets, and it's all based off the key range. So if you look at this and follow this with me, you have this high and you have that midpoint. That's half the size of this range, right? So here's the full range right here. This is half the range. We're right at the edge. So if we fail, we go half the range down easily. If we see the bulls defend this level and it holds, you go equidistant to the upside, and that puts you at the 13,369.63. So that's basically 13,370. That's the equidistant target here. And 465 is the pivot. So for the NQ, it all comes down to 465 right here, 12,465. If it can hold this zone by the end of the month, we may be at 13,400. If we fail to hold this zone, then we could be at 11,600 within a few days. It could be a 1,000 point pullback very, very quickly. So that's kind of the swing direction here for the month that you should continue to watch. Normally in an uptrending market, the first week can be a pullback of the month. You find the low, you buy the dip, and you rally into the end of the month. That's in an uptrending market. If this is going to fail, it would fail here, and that opens up the lower edge. So right now I would say if we had to provide directional bias, everything's still pointing to the upside unless we just start to give up 12,600, 12,500, 12,465, then that it really just exacerbates the move to the downside. It just increases that speed and frequency down to 11,560. 2 days would be there, 3 days. So it could be huge. So this is going to be the key level to watch here. If you look at the ES, very similar as well. The key levels are right on the money. Last time we had our monthly market outlook was first week of December. I mentioned that if we pull back into this zone, we likely finish the year into 37.81 half. And we got very close. You can see it got right here, got very close. The last couple days has almost gotten there, but for the most part, that played out pretty nice. You'll notice here, just like the NQ, there's your key range high, there's your key range low. Right now, this is doing very similar. It's kind of holding just above there with very strong lows here. That tells us that 35.87 continues to be the major level to watch. If price fails to hold this zone, again, it's a very similar move to the one that we just discussed in the NQ, where you rotate down to the midpoint and the bottom of this key range. So 3,400 and 3,200 would be the next two downside targets if it can't hold 35.87. As of right now, everything's still trending up, still holding the pivot range. It's kind of a choppy affair up here, but everything's trending higher. But I would say if it fails to hold this level, there's going to be some very, very good directional conviction to the downside, however brief it might be. It doesn't have to take long to really get that thing going. So if it rejects up here hard, that might slingshot prices back to 35.87 for a hard test. And if it can't hold that level, that's what opens up a broader pullback. So those are some of the major markets there, starting with the YM, NQES. If we look at something like RTY, for example, this one has been very, very strong, has been a leadership futures market here. One of the things we talked about was here. That was in November, and we talked about this as being my favorite buy signal. That was from the November market outlook. Buy signal with a failed new low, and it exceeded expectations in the first week and from there just continued to crush into the end of the year. That was a 2-month move that culminates here today with a new high at 2081.40. That's tremendous how strong that's been, but that started with that favorite pattern from the monthly market outlook a couple of months ago. You've now seen that this thing has exploded through the 1720s, which is the previous highs, and now there's new market structure being developed here above that zone, all of this thin part of the profile. So at some point, if this becomes a blow off top, because look how long we've gone from this low and we've gone up, 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 and then the biggest up day of this entire move has occurred today, plus 4.2%. If there's some sort of reaction or blow off top that comes here soon, we may walk it all the way back to 1723, but then likely to stay in this zone up above here and create market structure above that zone. So this is going to be interesting for RTY. It has been in a leadership position here, but anytime you have the biggest day, up day, at the end of a very pronounced long-term trend, sometimes there can be signs of a blow-off top. So tomorrow's going to tell us a lot. If tomorrow's close is below the open, there'll be a sell signal here, and that could snap us back to the midpoint, maybe back to the previous month's low, with more to come. But again, very difficult to really keep this market down for long right now. So I would be a little bit more cautious with RTY. Now, with regards to the dollar here, the dollar has gotten crushed here lately. This is the US dollar index. One of the things we talked about late last year was this rounded bottom that was developing, and I mentioned, you know, if it can get above 95s, it opens up a move back up across the range toward 98, 99, and man, was it rejected very hard here, and that opened up the stops to the downside into 92s through that zone. We are now approaching long-term support. So for those of you looking at the dollar here, long-term support coming into play at 88.5. That's been a zone we referenced before. I actually referenced it right here. When we broke down through 92s, I said the only level down there is here, and if it can't hold there, then we're coming back, right? It held and bounced and went all the way back to highs. Now we've done the same exact thing. It was trying to hold 92s and failed. Here it's trying to hold 92s and failed. And now it's on its way down here to 88.5. So right now we're trading 89, 398s. There's a little bit more downside that can be seen between 88 and 88.5. And at that point, we likely start to make a move higher. Again, back toward 98, something like that. Now, oftentimes when this one turns around, it tends to do so after being very heavy at one extreme or the other. You know, when it got down here, it got very heavy and turned into a huge rounded bottom, and then bang, exploded. When it got up here, you know, it built out a head and shoulder for a while, rounded top, and boom, dropped. This was a much sharper reaction with absorption off the right edge. So over here, we have to see, do we have that reaction to give us a strong low? And after that, we may see a period of development. Last time when it dropped early in the year, it started rallying in April, and that's what triggered this move up. So we're coming into long-term support. It's that 88.5. If we can find some sort of major reaction at that zone here over the next few weeks, we may find a reliable bottom to work off of in the dollar. I also wanted to talk Bitcoin here. Bitcoin with tremendous movement here, a new all-time high, 36,315 is the closing high here today. Got over 37 as an all-time high. We had this one. This has been tremendous, but nobody can ever expect this. But it's getting very bubblicious. Obviously, nothing grows to the moon like this without coming down at some point. But it's been a tremendous move. We talked about it back here in September. What was it? October. The PayPal deal really helped ignite this thing to the upside. and we had targets that gave us 29 as the next target. So I discussed in our trading room that 29K was the next upside target that might get hit sometime in the next 6 months, and it got hit by the end of the year. The volatility right now is incredible. At some point, you would imagine that there will be a pullback to retrade some of this market structure. All the way down to 12K, it's very, very thin. But down here, from 14 down to 4, that's a great D-shaped profile. But at 14, it's nothing on this profile up here. And theoretically speaking, it could auction all the way back through those prices at some point down the road before going. Now, at what point do we get a high? I have no clue right now. At times this thing can get more and more vertical until the day happens where it gets flushed. It's going to be hard to call a top here right now, but I think this thing has huge potential down the road beyond where we're even at right now. If you look at the weekly time frame, we were trying to base our upside projections off this initial key range, and that's how we got 29K. Very good move. And we also got the negative 100, which was 4K basically. So it's reached both sides of those. I think right now the best case scenario would be some sort of pullback that gives us a new key range that we can have some tradable values off of. But other than that, I think long term this still has some pretty good upside that could be seen, and any pullback as deep as 14 could still be long term in play. So right now I think it's hard to really judge these types of markets when it's this crazy. Again, was a weekly chart, 2 huge weeks up so far. You know, at some point you may have to come back to 25K at the very least and maybe bisect the two market distributions down below. So you have one like that and one like this, and you may trade in here a little bit like this. If you break down, then you trade a little bit like that, then back up and trade like this, and then take off. So that's one way this thing can go, but very, very bullish. The other one that we've been talking about is Ethereum. We had this one as a candidate to double back not too long ago. I mean, this was right here on this day. That was mid-November. At the time, this was $70. We were looking to move to 140. We got it, and then it topped out at 205. Right here, we had the split, which brought this thing back to size. But now we're sitting on major market structure for Ethereum here that suggests way more upside ahead that could be seen. For example, you see this large rounded bottom, explosive move. This might be kind of the pullback before it takes off again. If you look at the weekly time frame, it's looking the part in terms of some rejection. Right here, failed new low developing, nice tail, decent pullback after the big wave up. This one could get us going higher very quickly. So if this thing can close the week very strong here, we may have a 14 to 28 double that could be played ahead for this one. After doubling here just recently, this one might have another shot again. So this is going to be one to keep an eye on as well. That's Ethereum. And then we'll get to some stocks here in a moment, but first I want to talk about gold. And in the trading room today, I talked about gold because, you know, we talked this day, the pre-market video, that we thought a 100 handle rally could be in play from 1770s to 1870s. We got there. I mentioned if it can reclaim 1874, we might get 1960 to 1980. But I did mention also if we get to 1960 to 1980, there could be a tremendous reaction or rejection that happens there, because it's very clear the market just doesn't want to trade above that level right now. It's looking like a long-term absorption signature. And one thing that I'm noticing as well is how this pattern right here, look at how strong this rejection is, and boom, it drops, and then each of these turns right here Boom, 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 right, turning down, turning down. This one might turn down as well. If you go back and compare this, it reminds me like the weekly chart pattern from 2012. So if you go to 2012 here, bring this back out, here it is. Again, this is weekly charts right here. Weekly charts. This over here is daily or weekly now as well. So here's what we were just looking at. Sharp top, big drop, and now big tail developing. It looks like this over here. Sharp drop here, and the right side over here being defended. This was 18K, sorry, 1800, and that's very similar to the 1980 level, 1960 zone that's happening over here. So that's an important zone right there. That's an important zone, again, because if it can't get above that zone, then it rotates back to the prior pivot low, as it did here. We talked about this at the time. And that means that we could at least come down to this low here, that's 1766. Now, if it breaks there, that's when it really opens up the downside. If it breaks here, it's going to open up the downside into 1525. 1525 would be the next key market structure level down. So when we're looking at this in terms of market structure levels, 18K, 1800, very important. You now have 21 as the next level up here. That's a new level. 1525 is right here, important level. Down here you have 1375, 1200 right here, which I guess I can make it a little bit better there. And then you have the 1045 down here. Those are your key levels there and your key market distributions. And once we broke here, you can see we traded a bit there, then we traded a bit there, and now we traded in the news distribution here. If we fail here and we break there, this could be a move to back to 1525 as you retrade this market distribution here. And we could, even if we fail here, trade in the lower distribution. So it could walk itself all the way back down. So this is going to be really, really interesting. Again, right now, this is a developing weekly chart right here with a sell signal that's coming into play for gold. It may not finish the week that way because we still have a full 2 days of trading before that happens, but very similar price action to way back when. And at the very least, I would say 1766 could be in play, and through that level could be much, much more ahead. So gold right now, if it can't finish strong this week, may be in for a broader pullback. The good news is for bulls that if it can get through it 1980, it's a open air move up ahead to new highs. I mean, there's nothing really there, and that could be quite bullish if that were the case. So that's a look here at gold futures. Now, I did want to get to some of the stocks here. One stock that we talked about here recently is Tesla. For those of you that attended our monthly market outlook here a couple of months back in November, this was one of my candidates for a breakout. We had it based off of this key range, and we were looking at 675 as the target, which was reached on this day here. But on this pullback, and we were clearly going to reach it, I updated the key range to include a broader pullback and give us a better target, and that's when we came up with the 732 target from that key range. We just reached that here, but the goal here that November day was we built up enough energy for the last couple of months that if we break out from this range, we could see 2 months rally into the close where we reach those targets. So Tesla got that and then some, now topping out at 774. That's a huge run, a huge move, and it shows the principle that we continue to go by, which is compression leads to expansion. Right? Compression leads to expansion. And that's a major, major deal, especially when you get a great key range to measure your targets off of, which is what gives us some of this precision. So very solid move here. We've now reached the targets, both targets we provided. And now, again, you don't want to short Tesla. This thing is too strong. But at some point here, we may see another pullback, maybe not that big, maybe a pullback that could give us the next key range, like this maybe, or that one, and then we can work off of that key range. So still trending up, any pullback, still a buying opportunity until proven otherwise. But now that we've completed this major target here, we got to kind of let it build out for the next major move. So that was Tesla, a great move out of that one. Another one we've talked about which has similar characteristics is Netflix. Similar in that it built this key range here and has been developing inside the middle 50% of that key range. Is this distributive, or is this a reaccumulation phase? That's what we got to kind of figure out, because after this recent rally that took us from 300, 280, all the way up to 575, that's massive, and now it's been up here just trading the last 4 to 5 months. 1, 2, 3, 4, 5, 6 months actually of range-bound action, 6 months of perhaps distribution. If it can't hold 460 here, we might start to see this thing rotate back down and retrade through some of these levels we haven't seen before. Likewise, if we do pull back some and see a major rejection here, this might lead to a massive upside break. So the energy in here is tremendous. So this is one of those ones that's not quite ready to be actionable yet, at least to the upside, but is or should remain on the radar here because it has the potential to see major expansion down the road. So keep an eye on this one as it develops. This has been one that's been on the radar for a while. Another one here, this is a cannabis stock. This is one we've talked about in our group here over the last month or two with regards to its accumulation phase. It's developed a great accumulation. We started talking about it, I think it was this day, where it had a huge move up, and it kind of started this move out of the small rounded formation. From there we mentioned, hey, this breakthrough 6 suggests a test at 9, and we got that test. Now you see a larger rounded bottom here, a very clear resistance across the top. That's a big saucer, right? That accumulation could trigger the next major wave of strength down the road. Now, the thing about these accumulation patterns is that we don't know when the breakout's going to be. It can take a while. But look at this, from 25, 26 up here, this thing sold off, and over the last 15 months has accumulated in this big rounded bottom pattern right here. That is tremendous because it's built the energy to go the distance. So think of this accumulation as kind of gassing up the fuel tank here before you take a long distance drive, right? This is the energy, the fuel, and because it has built up over the last 12 to 15 months, it may have 12 to 15 months of strength behind it. So if it does break to the upside, there's an easy target at 18, which means just from the closing price today, that's a double if it can get up there. And then if it does that, there's more juice here to get you all the way across the range into the previous highs, which is 25, which means that would be a triple from current price. So 865 times 3 gets you right in the 24 to 26 zone. That's a great move here down the road. Again, not super actionable here at the moment because it's on highs and it just hasn't broken yet. If you can get it on a pullback or you can get it on the breakout day, this thing might be ready to really rock and roll. So this one's building up some energy here that could be very significant down the road for those of you that want something a little bit longer term. Gilead is one of these as well that has a really good shot to have a strong quarter. Again, we're looking right here at a weekly time frame, and you'll notice that 61.5 here has been a very strong area support, 85 major area resistance, and then you have a couple of mid levels, 70 and kind of the 76 level right here. And you can see price dropped below 61.5 and traded in a little box down here. This was a lower low failure with a bullish divergence, and price is now trying to pop back above, has popped back above the 61.5 and closed above it for the first time in a quarter. To reclaim 61.5 would suggest a move across the range to the other end of this smaller distribution. So that means 70 is in play. So if this thing can get through 61.5 and hold, tomorrow could be a pullback, but as long as it stays above 61.5, if it can reclaim control 61.5, we got 70 up above. And then there could be, a walk up of the ladder back toward 85s down the road. But for right now, there could be an easy 10-handle move coming to the upside. We talked about this one the first trading day of the year in our trading room. A great lower low reaction, a great start. We said there's a move coming to 61.5 for a test. Today was it. If it can reclaim this, again, you start walking your way back up to 70. Maybe back up to 76, etc., and down the way. So Gilead is one of these ones that looks the part right now for perhaps making a move to the upside after being kind of beaten down a little bit. Peloton has been huge. The recent rally in this one, we've had it as a buy candidate on several occasions here on these buy signals. Had it as a sell candidate here, and that worked out for 1 or 2 days before it turned around and gave us this strong buy signal, and that buy signal lit things up to the upside. Again, another major rotation higher. So from that midpoint entry here of 100, this thing went to 165. That's tremendous. Now we're pulling back. We're right inside the pivot range for the month. Not the strongest reaction here. So I'm not going to say this is the low and we go higher. But somewhere on this pullback, you'd like to see something like this day, right? Something like this day. Something strong here, even this day where it gives you a signal. Something where you see a reaction, because that reaction may be the bottom before it tries another hand higher. This has been a very strong stock. It's exploded since last spring when it was 20, 30 bucks. All of my key levels from that time frame now to be 150, 140. It's just incredible, but that's this market. And this one still has the potential to continue to expand. So looks really strong, not quite ready to buy like tomorrow, but it's getting close here to a point where it may begin to see a pretty solid bounce. Here's one we've been following also in our trading room, Palantir. This one has the potential to double here pretty soon. It's in the zone right now for a potential double. If you look at the key range here that this one has developed, it had a strong high here, 33.5, strong low here, 21.15, midpoint retest, 27.33. And it's been trading perfectly inside the middle part of this range. Right now we're kind of at the lower end of the range. The key range low is here, which means a rejection anywhere in this zone right here, as low as 20 bucks, could be the optimum entry. Now, based off this key range, that's your target right there. 45.86. This one right here, 39.68. That's your 50% target. So if you think that this thing might hit 46, then a 23 entry is your double target. So that's your double. That's your entry is 23. You get to 46 as a target. You can sell half there and play with house money the rest of the time. So right now, this one, not showing tremendous signs of rejection. It's just price-wise, it's right in the zone. If it were to come down a little bit lower and reject here, 20 may be the optimum move for 40. And then beyond. So this one, again, one of those that's still kind of in the oven, not really quite ready to be actionable, but at the same time it's getting very, very close. It's right in that good zone where you'd like to take a shot. Microsoft here is one that continues to develop. This one's very similar to Netflix in that it has traded sideways for a long while. 1, 2, 3, 4, 5, 6 months of sideways price action. Again, you got to ask yourself, is this a distribution or reaccumulation? If it's a distribution, you know, there could be quite a pullback to come, but this one tends to snap back very quickly. You know, you want to avoid the chop in here, but to re-engage this one, I think would be a really good shot somewhere in the 190 zone, below the 200-day by a little bit into the LVN, wiping out some of these lows. 190 might be a really good shot to get this thing going higher down the road. So this one's kind of in the range right now, but we will see here how it continues from here, because any kind of wipeout phase could be very, very good ahead. Okay. Now, in terms of a couple of short-term swing candidates here, we've been talking about 1 month out, 2 to 3 months out. This is one that could be, you know, a 3 to 5 day candidate, maybe a 1 to 2 week if it really gets going. This has been a very strong stock. This is BLDR. This one had a pretty good reaction today, a good rejection day, where price dropped early, reacted, failed low, and responded back up. So really, really strong stuff here. So failed new low, bullish outside bar, buy signal, and it happens at the monthly pivot range. A pullback tomorrow, saying to 40, could be a buy for a continuation higher toward 45. So this could be a 40 to 45 play over the course of the next 1 to 2 weeks. If price fails to hold 40 on a closing basis, or especially 39.50, this opportunity is off the table here, at least short term. But right now it looks the part for a continuation higher, especially if it can continue to hold 40. 45 could be the next upside target on a short-term basis. And on a swing short basis, keep an eye on GPN right now. Again, this market, very difficult to find short candidates at the moment, because even if you do get a reaction or a rejection, it's a 1 day or maybe a 2 or 3 day pullback before it starts to squeeze again. So you got to be careful with shorting in the current market right now, but this one is one that looks fairly decent, because you're reacting at a key level here. So 210 was the previous highs, that's the COVID highs, and then it dropped to the COVID low there. It finally got all the way back to that level, and you can see how price has been reacting around that level so far. It had a big reaction the first trading day of the year. Today was a failed new high, and then you have a bearish sell signal there, and it's happening at that 210 from below. So this can tend to be the time where you see a short-term pullback that can take you, say, to the previous month's low. That would be about 190. Right now we're at 207. So this is a short-term candidate where if price pulls back to 208 and can stay below 210s, you have a shot to see maybe a little bit of weakness back toward about 190. So there could be about a plus 10 to plus 15, maybe even a little bit more depending on the entry there on the downside. But again, got to be cautious here with some of these candidates as the market has been super, super strong. Okay, again, if you wanted me to take a look at some of these candidates here, I certainly will. One of them here is Change Healthcare, CHNG. Thank you for that one, Mike. What you see here is a huge move, big gap up in this one today, up 30%. Obviously, likely news related. You know, hard to tell how it behaves after a massive gap like that. Usually when you have a tremendous pro gap like that, there's not a whole lot of fill. You know, it tends to kind of hold at those highs for a while. One thing I will say is before the gap up, you know, you kind of had this D-shaped profile developing. Now you have, you know, this. So to come down and retrade through some of that may not be out of the question here down the road. So major gap up. I would say normally when the gap is this big, you're not necessarily expecting a gap fill, but you also don't leave behind giant holes in the data and don't retrade it. So hard to tell with this one right now with the huge gap. Those are some thoughts. Oh yeah, a good question here as well. Dwayne says here, I see comments like gold won't come down until the dollar rallies. In your opinion, does the dollar rally you describe signal a gold sell-off? You know, that usually is one of the stronger correlations there. So I think that could be about right. I think the fact that we're at such extremes, you know, dollar's way down here and approaching significant resistance support at 88.5, that's just critical. Meanwhile, gold's way up here and above that 2012 peak, sitting just below 2K. So it's completely obviously inverted there, which it should. I definitely think that this 88.5 is important, that if it can bounce off this, it might trigger a broader pullback in gold finally. And that, again, pullback in gold may need to come back and trade all the way back through 1525 on a broader basis if that's the case. Just like this one might make, you know, if it bounces off the long-term 88.5, you know, it may have a broader pullback to 95s or something like that. So I do think that right now we're getting close to a point where the dollar can finally rally. Over here, I thought we were there. I thought we were getting close. We were so close. November, I talked about it. And I think the very next day we had a failed high, and that idea crashed and burned really quickly. So I still think we're getting close, and we'll see. Good question there. Here's another one, Uber. Uber's been great here recently. A nice rally and hold at the highs. Very strong low on the COVID low there, and a break through the top of that key range there. So we have that impulse sell-off with the key range mid. That gives us great levels right there, and based on this move here, the expectation is a target at 70 bucks. 70 bucks. So when we talked about Uber before, the last time we had as a buy signal here was here and here. Sorry, those two levels is where we had it. And one thing we talked about at both of those times was if this thing's going to get to 70, 35 is a double from 35. So anywhere right now is a good entry for that type of thing. Again, this one kind of did it very quickly to get to the 50% extension, you know, just a matter of a few weeks. Now it's building energy for what could turn into a broader rally here to 70, unless it fails to hold the market structure here at 48s, which would then open up a return to 40. So right now this thing is still poised for more upside. I think vaccines help this a lot. I think this was vaccine day, maybe right here, where it gaps up on vaccine day. Maybe it was, you know, it's one of these days is vaccine day, and that helps it tremendously with this type of industry. But everything is still sloping higher, and the next upside target is 70. So any pullback, I would say, as deep as even 42.5 could be a buy for 70, if that were to be the case. And if you look at the quarterly pivots, so that's the quarterly, previous quarter's high, previous quarter's close, previous quarter's low, that's the previous quarter midpoint. You know, again, if we were to pull back, if we were to pull back to that mid, you know, again, that could be a great spot to try and bounce it, or trap below it and bounce it. Not bad at all. Again, this one still has some potential upside here that could be seen. Here's Twitter. Twitter was one we had as a buy candidate in December. It was that level right there, or that rejection. We talked about 46 being the entry. 46 was the entry, it was the low. And we talked about a rally into the end of the year, and we got that move. So that was a terrific move, especially off the key range low. Something to watch now out of this one is, do we hold above the key range high? So you can see, actually, if we do this right here, there's the key range high, key range low, key range mid, and then right now we're in this tiny little box here above it. So it's those types of things that if it can't hold this level now to 52.5, you rotate back to 46, maybe even all the way back down to 40, and then that could be an opportunity to buy it back in for a move higher. So this is going to be really interesting to see if it can hold 52.5 here. All right. Well, it looks like we've gotten to everything here. Again, I want to say thank you all very much for joining me for the monthly market outlook. A lot of great stocks here, a lot of great markets we talked about. We're starting off with that huge expanded formation in the YM. You know, again, gold with that major formation developing in the daily. That looks like that weekly chart pattern. We have potential key range action that could happen in both the ES and the NQ as they sit just above their respective key range highs. The dollar's approaching 88.5. Bitcoin's way up through 36, 37. Just incredible movement. Netflix hitting our targets. A lot of big time action here as we've begun the year and as we finish the year. We'll see how this plays out heading into the end of the month. We'll do this again at the beginning of February, and also I was going to give out some information here regarding PivotBoss Masters, but we'll be doing that soon here to let everybody know when the upcoming dates are. All right, everyone, have a fantastic rest of your evening. Thanks for joining me, and I'll see you in the trading room. Take care.